The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We posted the chart of the DAX. As you can see, it had a huge rally. We also posted the chart of the FTSE. It's had very little rally, so totally different markets there as we usually see. And of course, one of the market that we want to be watching very closely here is Bitcoin. And I'm just bringing this to you because of the chart, folks. No different than if we were looking at GameStop or something like that. I'm just showing you the patterns. We still got a possibility to get it down here to 28,000. Now, one of the questions that someone asked me last night via email was, what was the tulip bulb mania like? Well, that was back in the 1600s, I believe 1682 era, as I recall. And it was basically they ran the little tiny tulip bulbs up to the price of about $10,000 per bulb. It might have been $20,000. I don't remember the exact price, but it was really, really incredible. And, of course, one of the stories was a man came home from work and he saw these tulip bulbs on the table and cooked them and ate them. And they were worth about $30,000, I suppose. I don't know if his wife took a knife to him or not. But a lot of these stories you can get out of a book called by Donald Mackey, The Popular Delusioning and the Madness of Crowds. It's an incredible book. If you want to read something about manias and bubbles and stuff, that's the book to watch to read because it'll really give you an insight on how it goes. It's Donald Mackey, M-A-C-K-A-Y, and it's The Popular Delusions and the Madness of Crowds. And we've seen it in my career. We've seen it in 1972 in the grain markets. We saw it in 2000. We saw it in 1987. We saw it in just about all of 2008. And we're probably seeing it now, but we don't recognize it as such because it won't be till after the fact that someone realizes that this is what's happening. All the factors are there, but the market still hasn't turned down, from any significant level. We hit that big ABCD pattern last night, on Monday. Hold on one second here, boys and girls. I'm going to try to get this hooked up so I could get to where we're supposed to be. Here was the NASDAQ we were looking at. We were watching the market to go through the up to that 13,000 and 13,260, and we went through that like it didn't even exist, and we've almost matched the high of the 28th of January at 13,400. I think we did hit that. So that ABCD that we had on Monday, the fact that it was one standard deviation down really meant something. And I think that's why you have to be really careful to use stops in these markets, because if you don't, you're going to be in serious trouble. Now, if you remember last week, we were looking at the crude oil from the short side. I want to bring this up here to show you what we were looking at. You'll see here that we had these markets that were making lower tops in here, as you can see that, and we had lower bottoms. That means you were in a downtrend. But folks, when those things change, I just wanted to bring this to your attention because you're going to see a beautiful picture here that we were talking about. That is, once we cleared 53.20, and you'll notice that we had those equal corrections. You see, we had a rally. There were four of them, and we went down and we pulled back one more time to 52.30. And look what happened once we went to 53.20. Oh boy, off the way she went, and it's already exceeded $55 per barrel today. So this has a huge move in here, worth a couple $1,000, which is always nice to see the markets move like they're supposed to. They don't always do, but when they do, it's good. Now, we had something else happen, very important last night, folks, and that was the silver market. I want to bring this up to you here so you'll be able to see it. Now, this is basically when you're watching, I'm watching spot silver. That's the March, and it's a 60-minute chart. And the low on the day here, I drew the 61.618 expansion in. You'll see it comes in at 27.58, and then I also drew the 50% retracement coming in at 27.58. But the ABCD structure on this was a little bit lower, and if you bring it up and take a look at it, you'll see that it made it exactly at 27.29. The low was 27.29, and that was a spot on ABCD. We rallied about 50 cents since that level. Gold went down and made a 61% retracement at $1,830. Now we're trading up about $9 in that. But I do believe, folks, that we are looking for a very high probability that we're going to be looking at lower gold prices here to the tune of about $100 or more lower, $130 lower. And I'm just going to bring this to your attention. You decide what you want to see. We had this was a 4-hour chart. We had a 50% retracement in there last week that we were watching at 1880. The high was 1880.90. That was right at the 50% retracement. Today's low is 1830. We matched the low that we made a week ago, and that the ABCD on that takes you to 1720, and that's very close to that 1710 level that we're looking at, which is the long-term, pattern, which the multiple ABCDs are based on it. So that's what it looks like to me. Now, with all of that going on, let's just look at gold here for a minute. You'll be able to see that ABCD pattern that I just spoke about. You'll be able to see it easily. I brought a 5-minute chart up just so you can see it over the last couple of days. There's Sunday night. You can see the January, from January 31st into February 1st. 1877 was the presumed high. We got to 1876.80, which was within 10 cents of the exact high. And then look how the market started to roll over, folks. You'll notice those dark black lines there. Those are $10 rallies. And there's our bottom down there at 1830. This was right before the bottom was made at 1830. And now we rallied up to the 1839 level. But to me, this looks like this thing really wants to roll over and go a lot lower. So we'll have to wait and see. One of the factors that we've been watching, and believe me, it's not easy given all the news that's out there about the Wall Street bet boys. And but when they were starting to fool around with that silver market, they were playing in a game that they're not ready for, because you're playing against J.P. Morgan and the Federal Reserve and some big metal guys over in London and the United States. And they have big, deep pockets. And not only that, but they'll change the rules on you, just like they did in 1980. They'll just put it for liquidation only, and then there's no chance for the market to go up, because all you can do is get rid of your long positions by selling, and that makes it go down even faster. So we have to remind ourselves of that, of course. Now, let's look at the Gold Miners Index. This is very important, folks, because this is where these products come from, and we still are looking for a big 1.618 expansion down here, about another 14% lower, right around $30 in the gold miners index. And boy, if we get that one, I think that's when gold will be at that 1710 level, if it gets there, and then we'll be able to see what happens from that level. The key point to watch today is the low in the silver at 27.50, 27.29. If we go below that, that's suggesting even lower prices. Okay, we'll take a little break here. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're going to switch over to natural gas. We've been quite bullish this for several weeks, actually, since December. And if you notice in that December time period, we had a really nice head and shoulders bottom, with the right shoulder being at that last support area at 78% level. That was at the 240 level. We're now trading at 298, folks. That's a very big move. That's equivalent to more than $5 in crude oil. So this looks like it's getting very close to the 307 level, up another $1,000. And at that level is where it's probably may pause for a little bit, because we've been up for several days very, very quickly. Usually when you get 3 or 4 days in a row, you'll have some type of a back off. But this has potential for some real fireworks, and we'd like to see it get to that level, back off a little bit, and add some more to it, because this has a possibility of some really big moves. The news has not been good about this, and yet it still keeps going higher. And that's a very good sign, because it just keeps saying somebody's out there buying it. And believe me, it's not the mom and pop people from the Reddit or Robinhood Foundation folks. This is a commodity that's heavily traded, and it certainly looks like it wants to go higher. The question is raised about head and shoulders patterns. Why do I look at those? The reason why I look at those is because in Dr. Andrew Lowe's book, The Non-Random Walk Down Wall Street, one of the main patterns that he looks at and on a formula basis is the head and shoulders pattern. And the right shoulder should be a little higher than the left shoulder, and they should be roughly at exactly the same price, within a few percentages. And that when it has that, it has a perfect head and shoulders pattern, and that's no different than looking at the ABCD. All of these patterns have certain correct characteristics, folks, and all you're trying to do is to find the one that fits you. And that's really what it's all about. You're the one that has to take the responsibility for the risk that you take, not me. I can give you some really good ideas, and sometimes they're not as good as you might think, but other times, they do work pretty good. So that's really what it's all about. It's all about risk control, and going back to The Art of War by Sun Tzu, your greatest enemy is yourself. So know your greatest enemy, who is yourself. Look in the mirror. Remember the 9-inch cycle between your left ear and your right ear, and also the fact that you have to take responsibility for these trades, not me. I give you ideas, and the ideas are pretty good because I get a lot of good emails. I get a few bad ones, of course, but most of them are very, very positive. In fact, I got one this morning that was very, very pleasant, and I was happy to see that. I don't know if I can put that in there. I don't think I can because it will. I don't know. Yeah, there it is. We'll get it right there. And anyway, we'll just move on here and to talk about another market that's really ready to go, folks. It might not work, but it's no different than some of the others that we looked at. It's all about probabilities. Let's take a look at it because it affects the stock market and everything else. It's the second biggest currency after the euro and the U.S. dollar. The Japanese yen versus the dollar. And as you can see here, we're up here in this 105 area, and that is a perfect ABCD, and it's spot on right at the 78% level. It's been here for basically 2 days, so your risk here is very, very small, to the tune of about 30 pips. That would take it up to about let's say 105.40. That would be, roughly $400. And you can see that the profit objective on that would be well over 1,000. That's a 2.5 to 1 profit to loss, and that's what you'd like to see. You'd also see the fact that if you look at this very, very closely, at the very bottom here, when we were in January the 21st, when we had the first pullback, there was a head and shoulders pattern there, exactly at the right shoulder being 61% retracement. It's higher than the left shoulder. The time frame between the left shoulder and the head and the right shoulder is all equal, and that sets up what we call a head and shoulders pattern. It's and that's why it took off. But there was also a Gartley during that time of early January, but this one we were just focusing on this particular pattern that we're seeing now, which is the fact that these profit objectives on that long down there at 103 have now been met. So if you're in that trade, this is the time to take it off. I know it's going up, but by golly, this is when you have to, you've got the opportunity to get in there, and when opportunity affords itself, you've got to be able to take that, folks. That's really what you have to do. You just don't have any choices. It's all about probability and, making those choices. And that's one of the fun things about doing this for 60 years is every day is a little bit different, and it keeps you, relatively young. And that's what it's all about, staying on the green side of the grass and staying away from open graves. We're going to take a look here now at one that's been working really nicely for us. We're just about ready to add to this position, and this is the euro versus the U.S. dollar. We had the big ABCD to the upside there. We caught a great deal of that long trade from 116 up to the 122 and change level. We shorted it into that red box. That was a 382 retracement there. We've now broken down, as you can see today. We've finally cracked through that 382 level, and it looks like we're starting to head lower. And what we're doing now is we're raising our stop to 121 even. So if we get back to 121 in the euro versus the dollar, we're going to cash out for $1,000 profit and let the other boys play with it, because we don't want to risk any more than what we've already risked. Right now we're up a little over 1,700 in that, and we want to at least lock in $1,000. So let's keep our wits about us, because these things could change very, very easily, and usually on a dime, and giving no change when it does it. So those are just a few things that we want to be watching. A perfect example, folks, the odds on these trades usually are 65% in your favor, and the win ratio is, if you're really good at it, you like to shoot for 2 to 1 or 3 to 1, but if you get it 1.8 to 1, and you're profitable 65% of the time, folks, that's a really, really good system if you can do that. So that's it. By the way, congratulations to the O'Brien family. Tommy 13 came in today, getting ready to see Mr. Brady play. And boys and girls, we have a special, I just forgot, we have a very special announcement. Do not miss Friday's show. If you like football, Mr. Football himself, who's called every Super Bowl, all 50 of them, 55 of them, well, not quite that many, but Norm Winsky will be on with his prediction. I think he's been right 7 times in a row, as I recall. So that's always good. Probably fade him on this one, but he does it by astrological stuff. So he's been pretty good at it. So you might as well pay attention to it. But he'll be on Friday for a cameo appearance for those of you that like to bet on football, which was not me, but you folks can do it. I probably won't even watch the game, but part of it I probably will, because you don't get to see 2 great quarterbacks like that play together. And this young man, if he stays healthy, oh gee, is he going to break all the records? He's really quite spectacular, that young man from Kansas City. What is the point spread on the game? Does anybody know? I don't even know. It ought to be about even, I would think. I mean, the Chiefs have to be favored because their records. 7792766
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to show you the upside down version of the dollar yen. This is the long yen. Let's get this up here so we can take a quick look at it. This is basically the upside down version. It depends on which platform you use, how they bring this in as a cross rate. But you can see the importance of this Japanese yen trade that we looked at, because it's right at the 382 retracement. Now we're looking at 105, and this is at 95, which is the reverse side of it. So that's why it's at such a very, very important level. We know that 382 level is just absolutely dynamite to look at. It's really, really important to pay close attention to it. So that's just one of the things that we're focusing on here today, looking at some of these markets. Okay, now I did want to mention one other thing, a couple things that Rich Anderson brought to our attention today, folks. Now this is Rich is not able to join us today. He's very busy this morning, something to do with the church. But if you'll notice here, this is the purple line is the cash S&P, the SPX, and the yellow line is the dollar index inverted. In other words, the dollar index has been dropping. And of course, it's had a pretty good rally here the last few days here. But this is very, very important for stock, because look at this. The inverted dollar runs pretty close to what the correlation on this is probably close to 85%, Rich said. So he brought it to your attention. One of his people that he chats with all the time brought it to his attention, and he thought we should take a look at it. So I think it's worthy to take a look at it. We've had Shane bring on some really incredible correlations that we looked at. I think that one with natural gas was really spectacular that he brought out before I think it was last week when he was on, and that's worked incredibly well too. So this is where we are here. We'll keep this up to date. We'll let Rich bring it to our attention the next time he's able to come on the show here, but that's a really interesting one to look at. Another one to look at, folks, is here. This is one about the it's really hard to see. I'll bring this up so you can read it and everything. It's about CTAs and the way that you can see them, they're trading with all these monitors and stuff. This is from a brokerage firm, folks. It'll be like from Morgan Stanley, Goldman Sachs. This is how they're set up, little stations like this, and these are how the fellows trade. You'll notice some of them have charts up, some of them just are reading things. Your news reports are coming out, and that's how they're reacting. But what he's talking about here, that CTAs are currently long 32 billion S&P. That's 49% of historical high rank. 6 billion of the NASDAQ, which is the 12th highest rank, and 5 billion in the Russell, which is the 12th rank. So there is a lot of people long the market, but folks, for every person that's long, somebody's short. And that's it. 12 monitors. Duffy, tell me you don't have 12 monitors. Don't tell me that, please. Come on. It's really... I'll take a look at the bonds in just a second, Terry. But, I'm working off a 17-inch laptop. I've got behind me two 50-inch monitors that I don't even turn on because they're too darn bright. And I'm only watching about 8 things, so I don't really look at those darn things. So that's what we're watching, folks. Whether that means anything or not, I don't know, but we'll be watching it. 10 monitors is pretty a lot. I think they have quite a few of them. TFNN, Tommy O'Brien's got a bunch of them too, but he needs it because don't forget he's got Bloomberg and he's on the show all week long or all day long, off and on. So he really needs that. But for regular purposes for trading, I just don't think you really need that much. That's just my guess. So. That's all I can tell you. Anyway, those are a few of the things that we're paying very, very close attention to today. I wanted to reiterate some of these things here because look where we were. These are things from last week, but we're strong again today. So we got to remember to pay attention where we are here because I'm going to go through these. These are the There we go. This is euphoria. It's higher than we were in the dot-com bubble, which was pretty high. That, to me, was the bubble of all bubbles, if you want to remember it. Here's the one. That's not the one I want to show you. Hold on one second. This is another one about margin debt. Let's bring this up to show you where we are in margin debt. And we'll get this up to take a quick look at it. You'll see there's where we are with margin debt. And then the other one that Rich was kind enough to send us was the valuations. And this is another one that shows us, oh, shut the front door here in just a moment here. Let's get up here and, wow, let's get, hold on here, folks. I got something to take this thing out. There we go. Hold on. Let me get this up here. Okay, here's the margins. Valuations were higher than we were in the dot-com bubble. And boy, those were days that I'll never forget, because boy, oh boy, a stock would double in price just as somebody made a call to one of the companies making a potential to being a sale. So they had even potential sales targets. What the World Trade Federation? I don't know what that means. I think World Trade Federation is good enough. Well, I think WTF means where's the floor? That's what it means. Yeah, I think that's what it is anyway. And then also we want to take a look at stocks. These are ones that we were looking at last week. I'm just bringing them to your memory here to see what's going on. Okay, yes, we do have the natural gas and the oil stocks. Everything's rocking and rolling today. So we'll watch those very, very closely. We had that nice breakout in oil. We broke above 55. And we're still messing around right now. But right now, there's no reason to think. The only way you would, if this market would break to 54, that would be a sign that something's wrong in the crude oil. Because if it's really this strong, it's not going to get below 54.50 today. That's only 50 cents away. But that would be a place where I'd raise my stop on the long oil to 54.50. That way you lock in a $1,500 profit and don't have to worry about the natural gas. The same thing. If we get below 270 in the natural gas, you know, that's a huge one. And I would certainly, of course, it's got to break $2,000 to get there today. So if that happens, you don't want to be in it, and you'd lock in about 3,500 on that. So if that's the way you want to play it, that's a good way to do it. But when you've got good wins, folks, you got to remember that they're not always going to be winners. They turn on a dime, and you've got to book profits on the way up. That's what it's all about, you know. But let me tell you a very interesting story. This will only take a few minutes into our next break. We've got some friends down outside of St. Petersburg. They have one of those modular homes, you know, that they're put up on the site and stuff. He put it on a lot that he paid $35,000 for, and he had about $35,000 into the house, and he's had it for about 2 years. It's been trading at about $75,000 to $80,000 for it, and he put it on the market for $160, doubled the price, and lo and behold, in 24 hours he sold it to somebody from New York City for $160 large, and he made $80,000. He was there 2 years and had nothing in it, and boy, does that make it pretty easy. So let's see, maybe we got a caller coming in. Yes, we got a caller from Ormond Beach. Mike, what can we help you with?
Hey, Larry. Larry, I kind of missed the first part of your show. I don't know if you went over the silver market or not.
I did.
What's your take on the silver market? Where do you think we're going with it?
Okay, we got a break here. I'll cover silver when we get back, Mike. Stay with us, okay?
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and we've got Mike on the line. Is that from Florida, Mike?
Yes, right near the Daytona Beach area.
Okay. All right. Let's talk about silver. Before we came on the air, when we first came on the air, I brought silver to everybody's attention. The fact that the price of 27.29 was a perfect ABCD. I posted a chart, and I mentioned that if it gets below that, it's not looking very, very good. We thought all along by looking at the GDX, I'll bring this up. This is the Gold Silver Miners Index, looking like we want to go a whole lot lower. We're looking at lower prices in both gold and silver today and platinum today. So that's fulfilling the objectives that we're looking at. We hit a major top, I believe, yesterday actually Sunday night on silver, up around 30.05. We're trading $3 a barrel under $3 an ounce under that, which is $15,000. But Mike, stay with me 1 second, because
Sure.
I gave an idea here earlier this morning on the show here, and that was when the price of gold started down, rolling it over yesterday. You'll notice that each of the rallies, you can see the black marks there. Each of those rallies were $10. Our low today was $18.31. We rallied to $18.41, and now we're ready to make another new low. That shows you the harmonics that are there, that the market repeats itself over and over again. This market still looks lower, breaking below that big ABCD in silver at 29. 29 is not a very good sign. So as it looks this morning, I still think we're going to go lower. Whether the Washington, what they call WSB boys, Wall Street bets, are going to do anything about this, I don't know. But that's the way I see it. So I think we're looking lower in silver, and I think we got a slim chance, but it's getting less slim every day, to get gold down between 1760 and 1710 sometime between now and the middle of February. That's just in about two weeks. So that's what I'm watching. I hope that helps.
Yes, it does, Larry. Larry, I also want to tell everybody out there, if you're using TD Ameritrade, Mobile, Thinkorswim, and even the desktop, I've been having so many problems with it. Last Wednesday, it was as bad as it was last February and March. It was completely shut down. I couldn't put stops in. I couldn't change orders or place orders. It was a disaster.
Yeah.
And every time I call in, they say, well, our system can't handle the volume of trades going through from the cash market open till about 10 a.m. But yet they continue to advertise to keep bringing more people in. And that makes it even worse. So I'm really upset with TD Ameritrade.
You got to let them know that, because that is a problem. We see that everywhere. Fortunately, here in Tucson, we've got a really good stuff coming in. But, you really have to complain, because there is a huge volume of folks out there that are home. You can see it on just trying to do your regular internet stuff. And now, Mike, what you're looking at, you got all this data coming in, which takes a lot of, space. And then you've got these orders that have to be changed and stuff. And that's one of the things that, if you're really active, I'm not that active. I only look for 2 or 3 good trades a day. And if I see that, that's what I want to see. But sometimes I just have to wait and, wait for my best possible opportunity. And so far, I have not had any trouble with the data. I've had trouble, getting data once in a while, but not with placing orders, which is good. So, hey, stay with us, Mike. We got a caller that might add some. Shane, are you there?
Can you hear me, Larry?
WolfTrader.com is on the line. We got Mike on the line. You have something to add to that, Shane?
About TD?
Yes.
I like TD. I like TD.
Are you having any trouble with execution as far as getting the programs up and running and everything?
No, I'm not. But I know that when you get on the chat on TD, when you get on that support chat, it's like sometimes it's like 4 hours. But I don't really have too many support questions. But I guess at the open, you can have these traffic jams. But I like TD. I mean, it just sometimes they're right when it opens up. And then you have all of these new traders coming into the market. They're having to deal with a lot of new, novice traders that are opening their accounts for the first time. So I think it kind of bogs them down for sure.
Yeah, it's not like 9:30 in the morning till about maybe 10 or 10:30. Last Wednesday was the absolute worst. It was as bad as it was last February and March. But as the day goes on, like after about 11 a.m., it works fine. And when I love the Thinkorswim. I mean, I can set my charts up exactly the way I like. I can put every indicator on the chart, but they've got a problem. They can't manage all the volume in the morning during the cash market open. They've even admitted it. But like I said, they're out there continually advertising and bringing more people in, and it makes it even worse.
Well, just keep complaining, pal. That's all I can tell you. The squeaky wheel gets the grease, as they say in the old days of Terre Haute, Indiana. So, Shane, what do you got for us today? But thanks for calling in, Mike. We really appreciate it. Sure. And Shane, what are you looking at today?
Can you see the chart there, Larry?
We're looking at the S&P, and there you go. And there's natural gas, so it's very interesting.
Yeah, I talked about this. I was chatting with you last night. This is just a weekly time frame, so excuse me. I like to price the S&P in terms of natural gas because they tend to go in opposite directions on a weekly time frame. It's not always obvious like the dollar on the daily, but on the weekly, they tend to go sometimes in opposite directions. So this is one of my best. This is actually one of my best forecasting models for the weekly, which is just pricing that in terms of the S&P. So we can talk more about this tomorrow. I just wanted to bring this to the attention on the weekly time frame here. This S&P still looks pretty strong, and I talked about this in the newsletter. In the weekly, it still looks okay, but on the short term, this month is it's a little rough. But I do want to share. I just have 3 slides here. So the next slide, I just want to emphasize here what is going on. This huge battle going on right now with the Fed and with this market. We are in a severe negative Astro situation right now with the planetary speed index and the Fed just 3.0 falling. But you can see here on this graph, they have been throwing the kitchen sink at this thing. I mean, yesterday I couldn't believe what they were doing to try to bring this market back up. So they really came in strong yesterday into this market. You can see this yellow line going straight up. So they're getting way, way up there in terms of what they're trying to do on a daily basis to keep this market up. Now, notice that most of the time the market does follow the flow of the Fed, but you've seen this. This is the first time now that the market's resisting the Fed a little bit into here. So I'm going to circle this on the chart. This is the first time that you're actually seeing the Fed ramping and the market lagging. I mean, it did pick up yesterday and today, but man, I mean, they're really having to put a lot into this to keep this market up. So what you're seeing here is, you're seeing, yesterday we had that bounce in the overnight, and then the Fed took advantage of that, threw in all of this money. And so what you're seeing here is kind of an augmented bounce by the Fed, but we're definitely not out of the woods yet. I just want to emphasize that to everybody. The fast Fed trading model that we use for the platinum has not been trading. It's been kind of flat, and it's going into a short today at the close. So I don't think we're out of the woods yet on this, guys. So I would not let your guard down just yet. I know this bounce looks really, really impressive, and it is. But from everything I'm seeing with the Astro, I still think this month could have some negative surprises.
Hey, thanks. We'll see you tomorrow, Shane, at the regular time, 9:30.
Sounds good, Larry. I'll see you then.
You bet. TheWolfTrader.com. We'll be right back, folks. 877-927-6648 for little Tommy the 13th. Come in today.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we just seeing silver break below $27, so we've now dropped over $15,000 in a 24-hour period, but that's not unusual because it went up $12,500 in a very short period. Let's take a quick look at the Apple. This is one of the the largest held stock by far. And if we take a look at this in Apple, we just completed a big ABCD pattern here on yesterday we completed it on Friday, and we're now completing a 382 retracement up here at 35.91. I think that's where we are right now. This market is acting a whole lot weaker than the rest of the market, folks. When you stop and you think the NASDAQ is back above those highs, and we haven't even attempted to make a 382 retracement except till this morning here at 135.91. And that is a one danger signal in itself. But by golly, you got to look at all these other things because, there's just more than one stock in that NASDAQ. There's about 10 stocks that run the whole thing, and Apple happens to be one of them. But you've got Microsoft, Google, Tesla, all the other bandits that are in there. So watch the fact that Apple is not acting as good as it should, given the absolutely blockbuster, earnings that they had. My goodness, they shocked everybody, and the market, ran up a little bit and then gave it all back. So that's not a good sign. Folks, if you had to put your money on anything, I would look at this one right here. This is the one that looks like it's the best at 95. We're going to look at this tomorrow, see how it worked out, but we're almost there at 95.03 is what we're looking at to buy this thing with a risk of about 30 pips, $300. And if it's right, should have a couple shekels in it on the upside. So we want to be watching that. So tomorrow we are going to have as our guest, I believe, no guest tomorrow, but we have Norm Winsky will be Friday for the Super Bowl prediction. You don't want to miss that. 877-927-6648. And let's give a big one-hand clapping for our little Tommy the 13th that arrived today. And I'm sure he's going to have a lot of fun. He's going to have his life changed like he's never would believe.